Well, just moving on from the commodity action to what's happening in the auto ancillary space, because we've been talking quite a bit about all the action in the auto pack on back of fantastic numbers being posted by these auto majors for the month of December. But what does this really mean for the auto ancillary pack? To get some perspective into that, we've got with us Pragya Bansal, Associate Director of Fitch Ratings, joining us from Delhi. Thanks, Pragya, for joining us this morning on NDTV Profit. Pragya, just to get started, December, like a lot of people have said, has been Diwali for those auto majors. Does that mean that it's a good year ahead, or it's giving us some sense that the auto ancillary pack could see lots of action picking up?
Yes, we expect that the auto ancillaries would continue to perform good even during 2011, primarily because of the good prospects for the auto sales. We expect the profitability to remain high on the back of the growing automotive volumes, though the large capex plans that these auto ancillaries have initiated remains a cause of concern. But as long as they're able to maintain the profitability that they've been posting for the last couple of quarters, we expect to see some positive actions on the ratings of the auto ancillaries.
Right. Pragya, also just to talk about demand, because there is this general sense that yes, December has been a great month for these auto majors. Volume growth demand is going to ease off a little bit, at least in the next couple of months. Are you of the same opinion? Because if that's what it means, then of course I'm assuming demand for auto ancillary products will also be easing off.
Yes, we expect that the demand for the automobiles would continue in 2011, but at a lower pace as what we've seen in 2010. But another point that we expect for the auto ancillaries is that in 2010 the demand was essentially driven by the domestic automotive sales. But in 2011 we expect it to be more broad-based, wherein we expect a lot of some growth to come in from the export markets, which kind of remained subdued in 2010. And also from the aftermarkets, because in 2010 most of the auto ancillaries were essentially focusing on catering to the demand of the domestic OEMs. But 2011 we expect the demand to be more broad-based, with the growth coming in both from the exports and the aftermarkets besides the domestic OEs.
Right, capacity concerns, that is something that most people are worried about with the auto ancillary sector, because of course, and that is of course also impacting the way prices are panning out. What are you making of this? Do you think auto ancillary majors in the next couple of months at least will be able to come up to speed with capacity utilization additions?
Yes, 2010 there was a concern from the OEMs with regard to the capacity constraint in the supply chain. But with growing capacity additions by a large number of auto suppliers, we expect that 2011 would be a better year with most of these concerns being taken care of. Also the fact that there was some supply mismatch in 2010 on account of the fact that 2009 was a bad year, wherein most of these component manufacturers had kind of ramped down their capacities because to kind of match with the production levels, and it took them some while to again come up to the level so as to meet the OE requirements. But those concerns, I think, have been taken care of now, and 2011 we expect the auto suppliers to be able to meet the demand from the OEMs, with the addition in the capacities that they have taken in the last couple of months.
Right, Pragya, also, what in your opinion has a downside risk for auto ancillary? I'm assuming higher debt on back of capex plans and commodity prices. I mean, those only seem to be surging, right?
Correct. Besides that, I think the main underwriting risk factor remains the demand contraction in the automotive volumes, because that is what has kind of driven their growth in the last 12 months that we've seen. So anything which impacts the demand for the automotives would also have an impact on the auto ancillaries, besides their own concerns of the huge capex plans which are getting funded through debt, and also the rising commodity prices.
Right. Thanks very much, Pragya, for joining us. We'd love to chat longer with you on the auto ancillary space, but unfortunately we're running out of time. But thanks again. Well, on that note, we do slip in a quick commercial break. Come back, take you through all the corporate news as well that we've got picking up this morning.